and welcome to the Cache Metals Market Overview. I'm Jasmine Bowen, and you are listening exclusively for AM 640. Every Thursday at 7:05, we'll be bringing you news from around the globe as it affects our economy and the precious metal market. In the news this week, Greece, a big topic on our show. Greece has finally received its bailout from the EU. I know there's been a whole bunch of controversy about this, and the main theme of these questions is why? Why did the EU bail out Greece? Is sentimentality overriding economic sense? Frankly, I think that's true. I think the bailout is prolonging the inevitable, putting it on life support, beating a dead horse, however you want to say it. There are a lot of weak countries in the EU and very few strong ones left that are able to support them. Germany, the powerhouse of it all, is even starting to feel the pinch. And it's clear as well that the citizens of the EU are not going to accept a lower standard of living that they've gotten used to, living on all that borrowed money. I mean, look at the riots. So as the euro continues to go down, the only good thing that's come out of all of this, possibly, is that gold is going up due to that financial crisis. Which brings me to my next topic. Dennis Gartman mentioned the other day that the UAE, Iran, Turkey, they're starting to trade oil not with their own currencies, but with gold. Why are they doing this? Is their own currency unstable? Possibly, but I think what they are doing is fighting against the American dollar. They want a currency that is solid rather than a currency that just continuously is being printed. Let me explain something to you. The petrodollar. Now, oil is generally traded in US dollars, and the petrodollar is kind of a linchpin used for US hedge money. So America is causing inflation all around the world by printing money, as much money as they need, and then as they get products from other countries, they're just paying the bill by printing more money, therefore causing inflation in other currencies in other countries. So I think this is what the UAE is trying to work against. Solid currency, gold, throughout history. And that brings us to the third topic of today, diversification. Now, Grant T. from Toronto, you are our winner this week. You wrote in with your question, how much diversification should I have in my precious metal portfolio? Now, experts everywhere are going to say you should have 5 to 15%, but I'm going to say 30%. I know that's a high number, but you want your money to be safe. And right now, in these shaky economic times, safe isn't something that we all have. 30, 40, 50 years from now, people are going to look back on these times and study them, not as what to do, but what not to do. And you want to be around to be able to say, I still have my money, I kept it safe. Gold throughout history is the only currency that has survived. Precious metals are a safe haven. So I hope that answers your question, Grant. If you have any questions like this, you can visit cachemetals.com. On the right-hand side of your screen, write in your question, and we will give you an answer right away. Now, if we choose your question as the top question of the week, you do win a 1-ounce silver maple leaf courtesy of Cache Metals, just like Grant did. You can also give us a call. We are the experts in the industry. This is all we do, so we will get your question answered right away. Thanks for listening to the show this week. I'm Jasmine Bowen, and I will catch you next week, Thursday at 7:05.